Hello guys, welcome back to my channel. It's been a long post though. So today I want to take you guys on how you can use supply and demand to make a living. Trading only supply and demand using gold, especially gold, because this pair moves from zone to zone. So for you to trade supply and demand using gold, it's a very nice strategy. It's the best strategy so far. If you are trading gold, you should just pick a pair and focus on it. As for me, I really like gold, but I know when at times when you don't really, as in when the market started going sideways, it get frustrating. When you encounter many losses, it makes you want to lose out of your strategy. But if it works, it works. It's just for you to keep trying. If you take like 50 trade and let me say you take like 10 trade and both goes into losses, that is not enough for you to say your strategy is not working. Like what they say, you should at least test your strategy with more than or up to 100 trade before you concluded that your strategy is not working. At times it's based on how much you risk per trade. That really makes you to get panic when you undergone a lot of drawdown on your live account. So you should be risking something that you are okay of losing. You should risk at least 1% to 2% of your account. So if you lose like how many, maybe you lose like 10 trade, that is 10%. If you are risking 2%, lose 10 trade. When you are risking 2%, that is 20% of your account. So this supply and demand, it's the best. It's the best. You have to keep using it and you see the outcome. So number one thing, the rules that govern this strategy. One, you should know the trend of the market. Do this on your H1. You should know the trend of the market. Two, you mark the nearest supply and demand of the market. You mark the top and the roof of the market. That's what I mean. And then third, you should know when once your chart has broken structure to either the upside or the downside, mark out the nearest demand or supply zone. Once you mark it out, scale down to M15. You are marking this your OB on your H1. After which you done marking it, move down to M15. On your M15, you have to look for an imbalance on that zone which you marked. If there is imbalance on your M15, this is the right zone for you to trade. Then you can pull your trigger, or you can as well scale down to 5-minute chart for you to really take a trade. So do me a favor by tapping on the likes button, turn on notification bell, so whenever I drop a new video you get notified. Make sure you subscribe to this channel. So let us take you to the chart to really show you what I mean by this step by step base supply and demand. So right here I'm using gold chart H1. So this is how you can apply your supply in demand at the right way to use it, the right way to trade it. You know, keeping it simple is the best thing here. So right now on my H1, number one, we have to identify our trend. Then two, we have to mark out our OB. And three, we have to make sure that our OB that lead to a break of structure has an imbalance. It may not really has an imbalance on your H1, but when you move down, scale it down to M15. If it has an imbalance, that is a good OB for you to use. So I'll have to turn my chart right now to my line chart. So right now we can see that this market has been on a downtrend. The market has been on a downtrend right? It has been on a downtrend. That's what we saw. And eventually the market broke structure to the upside. So right here, market broken structure to the upside. It takes out this very high. And you checking out for the leg that take out the high is for you to turn your turn your chart right to your main candle. I'm trying to make this very simple. So you trying to turn your chart to the main candle, you can see that you have a big candle right here. Very fat, huge candle right here. This candle is so huge. So you cannot place your trade at this very point. You can't place your trade at this point because the market break structure using this candle and your stop loss will be right here. No, sir, you can't do that. And you target this very zone. Here will be your target. Target this zone because we know that gold moves from zone to zone. If you do that, this will be your RR now. Come on, it can be done this way. 1.67 will be your RR. You can do this. If you do this in a long run, it will not really be okay with your emotions or your mental health, because when you incur so many losses, it will seems like someone is after you, so you can't do that. So what you will do is, since you have marked out this very candle, is for you to move down to your M15. Like I said, you have to make sure that your M15 right there has an imbalance. If your M15 has an imbalance, that is the that as in, if it has an imbalance, you have to make sure that you marked that a closed zone that lead to that imbalance, a closer zone to the imbalance. So you can see here was the candle we marked. And let's look inside. Let me remove this box cause for us to see. So right here we see that we have an imbalance right here. There's an imbalance right, you know, there's imbalance right beneath this very wick right here. So from here, from this zone right till this point is the zone that we had. That is the zone we have. That is the zone we have, because from here down here, as in from here down to this point, is our imbalance. And right here, this very zone inside here becomes our liquidity. We marked that out. So under there becomes our liquidity. We just mark that out, and we are expecting the market to come back and take out this very line that I drew. Once the market comes back, it's gonna take out this very line that I just drew, then tapping into this zone, and then giving us an engulfing candle, which happens right here. You can see that this very two candle right here engulfs the two candle right here engulfs this very candle engulfs this very candle right here. It engulfs that very candle right there. So our entry will be right here. We place our entry like this. Our stop loss comes a bit beneath the wick of the candle, and we target the nearest zone, because this market moves from zone to zone. We target the nearest zone, which is right here. We have a wick there, and from this point the market has given us 1 to 12 instead of 1 to 1 point something share. So this is it. Target that week, which is 1 to 12 instead of 1 to 1.6, which was our initial target, which we're supposed to target. So this is how you use the supply and demand, put everything together to your own advantage. So let us check out the sell scenario. So that is the first one, And you know, if you are risking $1, you should have been making $12 right there. So let us check out the sell scenario. Still us using this very chart, which is our gold chart. So let's go back to our H1 and see our sell scenario, because that one was a buy scenario. So this is how you can trade gold. This is gold chart. This is gold. So now we can see that this market has been breaking structure to the upside. Like I said, first you should know your structure, you should know your trend. So we see that here was a zone to the upside. Here was a zone to the upside. Before we know, the market breaks structure to the downside, and we wait for a retest of that zone for us to look for our entry. So this is how it's going to look like. So this is it. I'm trying to. So this is what the pattern we are seeing here. This is the pattern that forms around this zone. So now let's check. See, here is the pattern that forms around this zone. So now here is what we saw, that the market broke structure to the upside and it breaks down. It closed beneath this very candle, and turn it to a line chart. It will give you a clear direction. You can see it's breaking structure to the downside. Then you have to wait for the market to pull back to the nearest um zone, to the nearest OB that lead to that break of structure. Go back to your normal chart. Now here is the OB. Here is the last bullish candle that lead to this break of structure. Like I said, you will not take your trade right here. If you are taking your trade right here, this is how much you will get. This is the RR you will incur. This is even better. You target right here. You target right here. This will give you 1 to 4 RR. But let's go back to our M15 and see what we are going to have. So on our M15 right there, like we said, we should mark our imbalance. We should make sure that this very zone which lead to this break of structure has an imbalance before we consider it valid. So right here, this is our imbalance. We have an imbalance here. We have imbalance right here. Let me scale that. From here to this week is our imbalance, which shows that this very zone is valid. Then we mark it out and we go to our M5, or we place our trade right here. After the imbalance, we have this inside zone. So we place our trade right beneath, above the zone, and don't forget that was 1 to 4 RR we got before. So at this point we were able to have our 1:8 RR. 1 to 8 RR is our target right here. Let me go to H1 and see if it is 1 to 8 or more than that, because it's our H1 that will shows us where to TP. Okay, so no, our TP is right, is our TP is 1 to 12, not 1 to 8. So from 1 to 4 RR, from 1 to 8, from 1 to 4 RR to 1 to 12.64 RR, which if you are risking $1, you should be able to make 1 to 12 point something dollars from this trade. So this is how you can frame your work and make uh, massive profit from it. So this is how you can frame it. Guys, I'm not too good at English, so please pardon and learn what you want to learn. So this is it. Gold is very, if you know what you are doing, but I know at times we incur losses, but that shouldn't pull you away. Keep trying. So this is just me using my H1 in supply and demand, break in weakness of the zone, and knowing that if that zone has an imbalance, if the zone is valid, what makes the zone valid is one, break of structure, two, the zone that broken structure to either the upside or the downside has an imbalance on it. Then once the market pull back to that very zone, you move down to your H1. That is when you've gone to your M15 to mark out your imbalance, the zone that has imbalance, the nearest zone with an imbalance that lead to a break of structure. You mark it out. After which you mark it out, you still scale this very zone down to 5 minute chart. Then you wait for your 5 minute chart to take out liquidity either to the upside or to the downside, depending on what you are looking at, the trend of your market. That is when you are going to trade alongside. So once structure liquidity is being taken on your M5, you place your trade at the nearest at the OB that lead to a trade that lead to a break of structure to either the upside or the downside for you to take your trade, and you target the nearest zone. Note, gold move from zone to zone, so you don't have to target outside what the market didn't give you. At times you can be lucky to make more, but you should target zone to zone. So this is what I said I should bring to you guys today. If you learn anything, if this tutorial makes sense to you or you learn something from it, so subscribe to the channel. If it makes sense to you, subscribe. If you learn something from it, turn on the notification bell, so whenever I drop a new video, you'll be the first to get notified. I remain Aqua FX as I sign out. Thank you guys.